Welcome to On Point. My name is Arabile Kumete. Thank you so much to my colleague Nompumelelo Siziba there for that as well. Let's get into this market picture now and see exactly how things have fared across today's market picture. Asia, mostly in the red following that debate then between presidential candidate Joe Biden as well as President Donald Trump. It seems chaos reigned there, so chaos has reigned across the market picture as well, bringing in that sense of negativity, with only the Hang Seng and Hong Kong managing 0.8% in terms of gains on that front. Negativity all across the European market picture, the biggest faller being the DAX out in Germany at present, 0.5% weaker. This is still that lunchtime trade picture, but losing 64 points certainly tells you the story. We've also lost quite a bit, 0.2% weaker, in fact, for the JSE All Share, still above 54,000 points, I suppose, but the question is how long will we be able to remain above that mark? PPC was set to come out with earnings today. That didn't happen. They, in fact, renewed their cautionary announcement as well. Then we'll unpack whether that changes anything. Of course, the market's still trying to take in a little bit of that jobs number. But Capitec a little bit earlier on as well, coming out with a set of their earnings. Gerrie Fourie, the CEO, speaking to my colleague Nompumelelo Siziba, a take-up quite massively then of the digital sphere, of course, across COVID-19. It didn't just impact all the other retail spaces, but certainly even the banking counters themselves, even though a massive amount of their business did fall off, particularly then in the last financial year. So the big fall across that board, certainly, as I noted there, the financials also going down, but look at the banks going down 0.25% on that front. But the biggest fallers all across seem to be the resource shares, as they've gone down 0.9% today, and that's helped on by the gold mining and platinum shares, which have taken quite a massive hit. They're over 0.5% weaker as well for industrials. That's at sitting at 72,940 points. In terms of stocks that have certainly gone higher, pretty much following a similar picture as you'll see over there. Cardtrack and Montauk going up a similar amount, around 5%, should I say, on that front there. But the big fall is Afrox going down 7.5%. Liberty 2 Degrees and some of the other property companies as well suffering quite heavily. Liberty 2 Degrees going down more than 6%. On the commodities board, as you can tell, more red on this front as well. More than 1.5% weaker for that Brent crude price. Increased number of COVID-19 cases globally still impacting demand across the world. And now it's headed back towards $40 a barrel. It's traded within a range of around $40 and $43 a barrel over the last 2 to 3 weeks or so. So I suppose that mark is not necessarily surprising. More than 1.25% lost for platinum shares as well. $872 there for an ounce of platinum. Gold sitting at a pretty much flat stance with that negative tilt, $1,885 a fine ounce on that front. In your currency, well, we've strengthened, but really not much to write home about there. We're still below 17 Rand, which is always a good mark to look at in this time. 16 Rand, 81 cents against the US dollar. Let's remind you that we started the year at 14 Rand, so we have lost 2 Rand and 80 odd cents thus far. Things have gotten worse at some stage, but we are trying to recover that little by little. 1967 is how much a euro will cost you, more than 1% strengthening in our local currency against the combined currency there, with the British pound then set to cost you 21 Rand 56 cents as well. Gerbrand Smith joins us then. He's from NEFG, and we unpack this market picture with him. Negative all across the board, Gerbrand. Is that really because of that debate between Joe Biden and Donald Trump? Could that have created this many jitters?
Yeah, look, I think there was a bit of jitters beforehand. There was a lot of stories over the last 2-3 weeks of a second wave, especially in Europe and some of the other countries. So, yeah, I think it's just a bit of negativity that continues. We had a good run from the bottom a few months back, and a bit of a pullback is probably natural for markets to do. But, yeah, all eyes on that specific debate at the moment.
Yeah, with all eyes on that sort of thing, we also await stimulus, perhaps, hopefully, out of the United States. The big issue, however, with that is that it doesn't seem to be forthcoming. Is the market now just awaiting that stimulus to pick itself up? Or is there another event on the calendar that perhaps can boost things again?
Yeah, there might be some more stimulus coming from some of these countries, but a lot of stimulus has been spent. We all know it's been in excess of the 2009 financial crisis by many margins and by many times by most countries. So we'll have to wait and see what the real economy is doing. And we see some of these glimmers in the local economy. We even had some of the hospital groups actually reporting trading statements that I think was a bit disappointing for investors out there. So the real economy is certainly struggling. Lots of money being pumped into the system over the last 3 months. Now only time will tell.
Certainly will be. We'll wait to see what time does tell us. So PPC was said to come out with a set of earnings. They decided not to do so and in fact renewed their cautionary announcement there. Should we be worried when you begin to delay the release of results? Something might be wrong?
Look, a while back it probably was, but these days the IFRS, I think, some of the companies are struggling. We had Tongaat a while back as well. The market actually hammered them. At the moment, PPC is actually up, but still it's a 2 billion loss for the year, which is not good. The debt is a huge problem for them. They got a great cash flow and they got some EBITDA, but certainly I think market cap of 900 million and debt of about 5.6 billion on the balance sheet doesn't bode well for long-term viability.
In terms of that long-term viability, you also have Capitec coming out with their set of earnings. We got to chat to the CEO, Gerrie Ferrier, a little bit earlier on. It seems that the taking on of the digital space in their app, for example, seemed to have been a big winner for them. This is an entity with now seemingly one of the largest customer bases in the country. And they continue to rack it in. How well are they doing?
Yeah, look, it's a brilliant business over many years now. They actually had customer growth to 14.8 million customers, which I think is extraordinary. If you look at the way they're selling new funeral policies, I think they're close to about 80,000 new funeral policies a month at the moment. So certainly they're doing lots of stuff right, but the credit market are very tough at the moment. We know people struggling to pay their debt, and you could see that in their credit impairment numbers. So, yeah, the credit impairment, I think, almost doubled. So the earnings actually came down about 78% for the 6 months. I think that's in line with some of the other banks that's already reported. Only time will tell here as well how many of these customers can survive and find new jobs. It seems like they're doing better in the last 2 months. So I think there's a lot of positivity from their side. Their business model is certainly sound, but yeah, when there's impairments and you do loans to customers, you're certainly going to feel the brunt with these events that you have.
Yeah, do you think Capitec and perhaps even all the other banks really are able to survive this? And I talk long term because the impact of COVID-19 is going to be long withstanding, particularly if you have things like credit impairments having shot up the way they have at present. So the question becomes, can they then change their business so much so that they can withstand the losses they're about to incur over the longer period because of COVID-19? Or are they going to have to write off a whole lot more?
Yeah, only time will tell on those. So I think most of the banks and Capitec has certainly written off lots of capital and bad loans. And we'll see how each of them has actually impaired their books and how did they do in a month or in 6 months or 12 months time when they have to do write-downs again. Maybe it's less. So lots of them have written down with the new IFRS rules. You actually have to write down what you think the future will entail, and most of these banks did that, Capitec themselves as well. So, yeah, I think it's a big call on South Africa. If South Africa is going to still stand in 2 or 3 years' time, certainly I think some of these banks are very cheap. It's quality assets. The fact that they didn't even make a loss through the toughest 3 or 6 months that I remember in my career, 20 years in the market, it certainly bodes that they have defensive models locally and they got well-capitalized banks locally. And I think the consumer can regain exposure. Maybe it will help us as South Africa to start having the right policies in place for the first time in many years. Stick to them. And yeah, certainly they're very cheap on price to books, most of these banks. Capitec is the most expensive one, but certainly if you look at the growth that they've done over the many years, normally they do return on equity of in excess of 20%, where the other banks are at 12. At the moment they're at 5. So hopefully those can recover, those metrics.
Yeah, let's see if they certainly do. Very quickly, you did speak about policy, and that's going to be quite critical. We still need that strategic plan from President Cyril Ramaphosa. We have MTBPS coming through next month as well. But the rand has strengthened today. Is there any more room for it to go strengthening from here, or are those two events, the plan and the medium-term budget policy statement by the finance minister, set to perhaps weaken the local currency even more?
I think lots of people are actually anticipating that, and it's probably not going to happen. That's normally a non-event when most people do expect stuff on the market. I think it's already probably priced in. The currency is very weak. It's been weak for quite some time. From before COVID, we had a few shocks. I think it's still about 15% undervalued on a PPP parity basis, and it should probably trade closer to 14 Rand 50 or 15 Rand. So I think if you've got a little bit of time on your side, you're probably going to get towards 15 Rand against the dollar. And we also have a softer dollar on a global context because they're actually printing more money than anybody else, but everybody's running to the dollar.
Yeah.
That's a lot of irony in markets at the moment and for the last few years.
Look, I certainly hope your prediction comes true, Gerbrand, and I'll make sure that I call you first up when the rand does hit that 15 Rand mark, that's for sure. Thank you so much for the time, though, this afternoon, Gerbrand. It's Gerbrand Smith then from NEF here joining us to unpack this market picture. We still have a whole lot of economic news then for you here on Point. Do stay tuned. We're with you right after this. Welcome back. Now, consumer price inflation has remained subdued in August. That's SABC data showing that annual consumer price inflation was 3.1% in the month. That's down from 3.2% in July. Now, consumer price index increased 0.2% month on month, particularly in August. The main contributors to that fall in the August reading, were food and non-alcoholic beverages, housing, as well as utilities, and as well as miscellaneous goods and services. Now, consumer inflation does remain well within the Reserve Bank's target range of between 3 to 6%, boosting chances of an interest rate cut. The central bank does expect inflation to average 3.3% this year particularly. It says the inflation outlook appears to be balanced and risks from currency depreciation are expected to stay muted. Let's go and move on to the ill-fated SAA now. Aviation expert Lyndon Burns has warned that suspending and later restarting an airline like South African Airways could be an expensive process. This after the national carrier's rescue practitioners said they were suspending SAA's operations and placing the airline under care and maintenance in a letter to its creditors. Now, they've also have had to explain that there has been progress to secure the required 10 billion rand, or 10.5 billion that is, to implement their business rescue plan. But in the meantime, SAA's operations will remain suspended while talks on the airline's funding options are still underway. Now, this is in an effort to keep the airline's assets in good condition when they're not being used. But one aviation expert warns that mothballing is not a simple or even a less expensive exercise. This is as many components and systems need more intensive and constant maintenance when a plane is parked, particularly for a prolonged period. Now, the small business community is in mourning after the passing of Zoli Kunene. Now, Kunene is 1/5 or 20% of the Kunene brothers who spent years building up black ownership in business. He passed away on Tuesday after a long life furthering the cause of human rights and black entrepreneurship in South Africa. Now, the Kunene brothers' business empire started back in 1978 when one of the brothers sold fresh milk in Vosloorus, which is in the east of Johannesburg. The brothers also built a stable of companies to include a financial services company as well as defense and security companies. Zoli Kunene was also active in public and corporate life. He served on the Denel board of directors as chairperson as well. Welcome back. Let's get into some international news now. And global luxury brands such as Louis Vuitton or even Prada are going all in on China this year, opening even new stores and even embracing online shopping for the mainland Chinese market. This is, of course, as the coronavirus pandemic continues to slam their sales elsewhere. Luxury purchases in mainland China quickly rebounded since it was the first to ease lockdown measures and stores began to reopen back in March. Most brands have reported double-digit growth for sales since the end of March. Chinese shoppers last year accounted for at least 37% of the $300 billion luxury goods market, with around two-thirds of the purchases also taking place when traveling abroad. Now, every child's dream may become a solemn place. Walt Disney has announced plans to retrench 28,000 of its workers, mostly at its United States theme parks. Disney says the parks' limited visitor capacity and uncertainty about how long the coronavirus pandemic would last are some of the reasons for the massive layoffs. Now, the company's theme parks have taken a major hit since the outbreak of COVID-19. All Disney theme parks were shut earlier this year as the virus spread. All except Disneyland in California have gradually reopened, though to a limited number of daily visitors. Now, the layoffs do apply to domestic employees, of which about 67% are part-time. Disney also has parks in Shanghai and Hong Kong, Tokyo, as well as Paris, which aren't, however, affected by this announcement. One can certainly attest to the market having been shifted quite dramatically across the board because of the debate between Democratic presidential nominee Joe Biden as well as President Donald Trump out in the United States. Let's see what that has meant exactly for the markets right here on the continent. Now, we are expecting the Higher Education Minister to deliver an address at the top of the hour, perhaps just on more COVID regulations and just the return to school of many pupils as well. The education here has certainly been slammed. We will await more clarity. SABC News will have that address for you live here on the channel as well. Do stay tuned though. I'm back with your headlines as well, hopefully at the top of the hour. Mpora Simpi does have your weather details right after this. Stay tuned.
The African Union condemned attacks against humanitarian and aid